Assalamu alaikum, friends. Welcome to Fuchs-Pierce Cipher. In this video, we will learn what the alternate bullish bat pattern is, how it forms in the market, and how traders use Fibonacci ratios to capture bullish reversals. The alternate bullish bat pattern is a harmonic reversal pattern that usually appears at the end of a downtrend and signals a potential bullish reversal. Like all harmonic patterns, it is built using 5 points: X, A, B, C, and D. The pattern starts with the X to A anchor leg, which sets the direction of the market move. Point B is identified by taking a Fibonacci retracement of the X to A leg. In the alternate bat pattern, point B commonly forms near the 38.2% retracement level. After point B, price moves upward to form point C. Point C is measured as a Fibonacci retracement of the A to B leg and must remain between 38.2% and 88.6%. Point D is the final completion point of the pattern. In the alternate bullish bat, point D forms at the 1.13 Fibonacci retracement of the XA leg. This zone is called the potential reversal zone, where buyers are expected to enter the market. Once price reaches point D, traders wait for bullish confirmation before placing a buy trade. For take-profit levels, Fibonacci is drawn from A to D, target 1 at 38.2%, target 2 at 50%, target 3 at 61.8% retracement. The stop loss is placed below the 1.13 Fibonacci of the XA leg beyond point D. This completes the alternate bullish bat pattern structure.